So welcome back to the channel, guys. In this video, we're taking a look at the news. Blackrock has partnered with Coinbase here. This is a big one for Bitcoin crypto adoption in general. So we're going to go through this main headline today. If you enjoy the content, subscribe to the channel. Introduce yourself in the comments down below. So we're proud to announce a partnership with Blackrock, says Coinbase. And Blackrock's Aladdin clients will now have direct access to crypto markets through Coinbase Prime. So what the heck is Aladdin? Is this the first we've heard from BlackRock about BTC and the potential adoption of crypto assets? Well, the answer to the second question there is no. So back on the end of March here, so this was an update from Alex Pompliano's channel. This was all about the Ukraine war and how this has accelerated growth of crypto assets, stablecoins, BTC, etc. So this was a statement from Larry Fink, the CEO of BlackRock, back at the end of March. So he says a less discussed aspect of the war is its potential impact on accelerating digital currencies. So he was already forward thinking back when this happened, with this major impact and the potential end of globalization, may it be. And so he was already thinking a few steps ahead here and looking at the situation and saying, look, maybe we need to start servicing our clients with these digital assets. So he draws attention to the US central bank, for example, recently launching a study to examine the potential implications of a US digital dollar, i.e. CBDC times. He highlights the potential benefits of reducing the risk of money laundering and corruption through means such as this, but he says digital currencies can also help bring down costs of cross-border payments, for example, when expatriate workers send funds back to their families. So he sees an increasing interest from his clients, and so BlackRock was studying back then digital currencies, stablecoins, etc. So fast forward about 4 months from there, and then we have this statement. So this is the news piece, Coinbase and BlackRock partnering here. So BlackRock obviously have done their due diligence and decided that Coinbase is the correct fit for them. So this is Coinbase Institutional's arm here. So this is a statement from Coinbase. Over the past few years, Coinbase has played a central role in developing and strengthening crypto markets as the safest, most trusted bridge to the crypto economy. And today marks an exciting next step on our journey as we announce that Coinbase is partnering with BlackRock, the world's largest asset manager, to provide institutional clients of Aladdin, which is BlackRock's end-to-end investment management platform with direct access to crypto, starting with Bitcoin. So starting with Bitcoin as the first asset. So this is exceptionally big in terms of the green light for crypto and Bitcoin on the biggest stage of them all. Institutions, they want to get their feet wet, and now they have a platform from which they can be onboarded very, very easily. So essentially they use Aladdin, which is essentially their terminal for managing assets, allocating to assets. And now they're tapping into the ability here through Coinbase to buy Bitcoin. So asset managers, allocators are going to be allocating to BTC. That is almost a given here with this huge move. So very, very exciting stuff. And this is from Joseph Shalom, who is their head of strategic partnerships. And he says the connectivity with Aladdin will allow clients to manage their Bitcoin exposures directly in their existing portfolio management and trading workflows for a whole portfolio view of risk across asset classes. So this will make it very easy for these institutional investors to allocate 1-2% to Bitcoin, maybe as a starting point, and simply do that from their trading desks. So we're going to start to see inflows from BlackRock via Coinbase here. That is a given. But also within this, they do talk about the full cycle or full life cycle of crypto assets. And up here, mention the word staking. So alarm bells ringing. Who's going proof of stake? Ethereum very damn soon. So I think we'll see Ethereum added to the list of potential assets that BlackRock and its institutional clients can get involved with. That is almost a certainty at this point with the mention of staking there. So how big is BlackRock? 10 trillion USD of assets under management, maybe 9 point something. I think they had a huge drawdown during 2022, half one, but still the biggest asset allocator in the world is coming to buy Bitcoin. This is huge, huge news. But how did Bitcoin react to this? Well, yesterday it was this candle that it was actually announced within. and the market pretty much absorbed it. Nothing really happened, but you can see from the open today, which is Friday, that we've had quite a nice move up here to just over 23,000 bucks, and the potential for a bullish engulfing candle to be printed. So interestingly enough, not a huge move. This is a huge fundamental change, I would suggest, in terms of who can come in and buy now. It's the big bags, the ones who have got huge money and can move markets. And these 1-2% allocations will make a huge difference going forward. So this is super, super bullish. But clearly during this market conditions right now, the news hasn't been, we haven't seen a huge green dildo get printed, for lesser words. But this is where we stand right now. So clearly this is a bullish signaling from big institutions. Then we've just looked at BTC price action here. We're pushing towards 23.5K. This is an area we want to see close above for bullish continuation, or we want to see it at least hold 21.5K to the downside if we do slide. Else we're probably moving towards the weekly range lows around $20,000. So very, very interesting stuff. What is potentially holding Bitcoin back right now? It is, of course, the dollar index, the Dixie. Yesterday had a big move up to around 106.5 and a slight pullback. Today, it's opened a little bit green here. If the dollar does push onwards and upwards, this is bearish for risk assets. So all eyes on the dollar. That is where we should be looking to see exactly where this plays out next. But it looks fairly bullish on the surface of things here. Price action looking towards reclaiming 23K, and those kind of big news items here from Blackrock here certainly aren't going to dampen spirits from the market participants. So let's jump into the kind of news over this week. So an update on Slope, which is the wallet provider from Solana, with all the hacks that occurred. Almost $10 million in funds stolen. Now, it was between Phantom or Slope who was to blame here, and it was Slope. So this wallet was actually saving user seed phrases in plain text files. So this is what security researchers have found in their investigations throughout the war room. This is just ridiculous. Like, this is criminal in many different senses of the word. So on their actual docs, so this was posted by DC Investor, Slope were branding themselves as a non-custodial wallet. Non-custodial as in you control your funds, you have full control over your private keys. As they say here, Slope Wallet does not store your mnemonics, so keep it safe. So as DC Investor strongly worded here says, there is a special place in hell reserved for closed source app devs who lie about how the apps work and how your information is stored, specifically and especially with private keys for wallets. So he says this is absolutely outrageous, and everyone in the Solana community and entire space should be appalled. There's a bit of back and forth within the comments here, but he says, I find it very hard to believe that this was just a mistake, potentially something more nefarious. And that makes quite a bit of sense, since as he points out here, if this is a pure wallet development team here to make such a stupid mistake, that would be grossly negligent to the point of almost disbelief here. So potentially this was, malicious in intent, supplanting the seeds here and then trying to steal those funds. So that's kind of the end of that one from Slope. Very bad indeed, sour taste in the mouths of many, but at least this wasn't a major issue affecting Ethereum and the Solana blockchains as was initially feared. So we have the blame put on Slope there. In terms of Solana, major news here. So this was a seriously interesting story to read this morning. 75% of Solana's TVL, total value locked on the chain, a key metric that we went by, was faked by this one guy here, or him and his brother. And now they've abandoned Solana, but want to do the same thing on Aptos. Aptos, the up-and-coming blockchain with Facebook developers that we covered just on the channel a few days ago. I'll leave a card just above if you haven't looked at that one, quite interesting. So this guy is now looking to pump TVL on Aptos potentially, but what the heck did he do over on Sol? Essentially, we'll keep this as a TLDR. I'll leave the article down below if you want to read into this. He was creating all these anonymous accounts as a developer and setting up loads of Solana-based DeFi protocols, the biggest of which being Saber Finance. And he also spun up Sunny. And if you remember, Sunny, the aggregator, had like 10 billion TVL at peak. The TVL just came out of nowhere this one day. It was up like sky high. And then the ratio between TVL and the token price was just a huge skew, and people started to buy the token, and it nuked. essentially a rug pull? Well, this is the face behind it. So the McLennan brothers of Texas here were just creating these new accounts, pretending to be random devs and setting up a load of different DeFi apps on Solana. And then essentially they were just moving TVL between these various apps they had created. And this, as they say within this article, was essentially double counting the value on the Saber ecosystem, just pumping TVL through the roof. So coding as 11 purportedly independent developers, Ian, a 20-something computer whiz from Texas, created a vast web of interlocking DeFi protocols that projected billions of dollars of double counted value on the Saber ecosystem, and this temporarily inflated the TVL, total value locked on Solana, back in November 2021. So it sent things absolutely skyrocketing. He had a web of lies, a web of protocols, and the TVL was just being double counted between all of them and just making the figures hugely overinflated. He was also behind Casio. This was a protocol that was hacked for $52 million. And in an unpublished actual article he was supposedly going to publish that CoinDesk here have uncovered, he writes, "I devised a scheme to maximize Solana's TVL. I would build protocols that stack on top of each other such that a dollar could be counted several times." So crazy stuff. The article does go on about some of the various protocols he did set up. Maybe worth a little bit of a read in your spare time here, but just goes to show not everything is as it seems, and especially counting on TVL as a key metric that many of us were doing throughout the back end of the last cycle. We need to look at different metrics. We need to see exactly where the funds are coming from, what is the breakdown of TVL, like what currency is it coming from, and where is that coming from? Is it being mirrored across multiple DApps? So very interesting stuff. The show goes on, however, and this guy now moving away from Solana and potentially into the Aptos ecosystem. Now I wanted to highlight this one because any of you interested in liquidity mining and potentially yield farming here, Optimism, the OP token, there is a huge liquidity mining or liquidity incentive program currently running. So Aave v3 is now live on Optimism. So if you get set up with Optimism on your MetaMask, you want to get involved with this, the program will run for 90 days and distribute 5 million OP tokens over that time frame throughout the Aave protocol. So essentially you can actually get paid here to borrow. Maybe you want to just get involved with some stablecoin assets, not take too many risks, but farm some OP rewards. I think this is a very good opportunity to do so, and it lasts for 3 months. Maybe start to look into this. I think there will be more OP rewards going around elsewhere on other different apps as well. So this from Aave, very interesting stuff. If you've got time, I would definitely suggest trying to farm some of these free tokens. OP Optimism has been on an absolute tear as of late. Now, bearishness and bullishness. So a key bearish tweet I found was this one from TED Talks Macro. So commencing in September, the Fed will withdraw up to 2.2 million US dollars out of the market per minute. He says bullish USD, bearish risk assets. And in terms of QT, quantitative tightening back in 2018, that was at 50 billion per month or 1.15 million per minute. So this is going to be even greater than that back in 2018, at which time the S&P lost 14% of its value over 3 months. So he's sounding the alarms of, bearish for risk assets and Bitcoin over the next few months, commencing primarily in September there. So alarms being sounded on the bear side, and then on the bull side, this was posted earlier by Arthur Hayes. Max bidding, he essentially saying it's time to really ramp up the bids here, especially with Ethereum, and to start really allocating funds from the ultimate shitcoin, which he calls cash, and back into crypto markets. So bulls and bears all over right now. This has been probably the first week we've started to see this talk. Arthur Hayes here, who is the former founder of BitMEX, is suggesting the Fed pivot may be coming sooner than people think, and this is why he's getting super bullish right now. If I keep scrolling down here, he picks apart some of Jerome Powell's statements from the Fed meeting earlier in July, and within this, he actually thinks he's found a few points that essentially are almost a trigger for him to say, time to go long. Jerome is starting to blink here. So within the article, he picks out this primary quote here from Jerome Powell. Jerome Powell stated, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases in the interest rates whilst we assess how our cumulative policy adjustments are affecting the economy and inflation. So Arthur reads into this, maybe inflation isn't the number one priority, and Powell is concerned about how rising rates are impacting the American economy. So the balancing act between interest rates and inflation, and on the right hand side we have the strength of the economy, jobs, growth, etc. So Arthur is pointing out here that Jerome is starting to blink. Inflation may not be the number one priority now. They're looking towards growth. So again, I'll leave this article down below. He picks through some of the statements in the Q&A as well, where Jerome Powell talks about the Fed funds rate being almost neutral now and gives some signs that maybe they're going to start easing off. And in Arthur's words here, he believes that they've reached the point, like the furthest point which the Fed can go. He doesn't think they can raise too much more past maybe September, October, November, but by the start of next year at the latest, that we will see a full-on Fed pivot, and they may start actually cutting interest rates back once again. And as he says within this article, money printer go motherfucking brr. That is his lead off. So he's super bullish. Many people being bearish, but I'm seeing a lot more people tick bullish right now. Very confusing times within the market. Of course, do your own due diligence. Something that may move markets later today is non-farm payrolls in the US. So essentially this is the job count, how many jobs are being added or removed from the labor force. So last month, jobs actually did better than expected. So in June, 372K jobs added, better than the 268K expected. If this comes worse this time round and we have bad news is actually better if you're looking for a Fed pivot. So that is the way you've got to read the markets right now. Bad news will be good news. If jobs absolutely nuke in the US, then a Fed pivot could be coming sooner than expected. Hence, Arthur Hayes' thesis that it's time to start bidding, and he is max bidding ETH. So I hope you enjoyed today's episode. If you did, smash a like on the video, subscribe to the channel if you're new, and drop a comment down below, guys. I'll see you in the next one. Goodbye.